After establishing a name in India's retail sector, Kishore Bayani, the chairman of the Future Group, decided to bring together many of the group's peripheral investments under a single holding company called Future Ventures, which was modeled after Warren Buffett's Berkshire Hathway. The company decided to launch a 750 crore IPO on the Indian bourses in May 2011. Yet the company, whose brands include Biba, Scullers, Lee Coopers, Anita Dongre, and food brands like Smith & Jones and Ching's, saw little interest from retail investors as the stock failed to survive in the double digits. Now, with investors restless to see value, the company has decided to demerge its fashion vertical and solely focus on its food businesses. VCCircle caught up with the company's CEO KK Rathi to talk about how the company will focus purely on its food vertical and bring more investors on board.
Okay, since its inception, I think Future Venture started off as an investment vehicle for the Future Group to invest in small upcoming businesses which can be helped by the ecosystem of Future Group. And that is how it is started. And Future Group started taking small stakes in various upcoming companies like End, Biba, Turtle. There are a number of such companies, Capital Foods. Over a period, it was realized that this particular company needs to focus on certain verticals. And it decided to focus on fashion as a large vertical because that is one of the biggest consumer spending we have, and food and FMCG. These are the two major verticals which we felt that one can get in. And their group had some companies which were outside the Pantaloon retail, large format retail stores. And that business was something which was brought into Future Venture. And therefore Future Venture started acquiring companies where it had much larger stake than minority stake. So it had so over a period you find that we have got 7 subsidiaries, and few of them are 100% subsidiaries. So it transformed into a managing or investing into small companies with a minority stake to a large companies with majority stake also.
Do you think the entrepreneur factor that makes many of these startups or many of these mid-level SMEs into the success stories that they are, do you think that plays out a lot in your portfolio companies if you all have so much involvement in their operations?
Of course. I think in India, businesses which are run by entrepreneurs in the initial stages, they have far greater chance of success because the initial period is the most difficult period where you are building up the business, and you need far more passion than a professional. And after it achieves certain scale, then obviously it needs to have far more involvement of professionals than simply an entrepreneur. I think that is the most difficult transformation which any business can have, where the entrepreneur has to start letting go of certain things. And how successfully manages that kind of transformation decides how far it can go, how far that particular business can go. And I think that is where we are playing a role.
I want to talk about the restructuring of the business. Now, you had 3 verticals, or you didn't actually you all had portfolio companies at the starting. Now you all have restructured into verticals. One was to say unlock value of those companies, and the other was to say to bring in more clarity so that you could bring in more institutional investors. Could you just give us an idea of what happened last year? Now you demerged the fashion arm.
Yes, this is what we are planning to do. You see, this was when we went for IPO of this company, and our thoughts were very clear that we want to develop these 3 verticals, 2 verticals in particular, into a large business vertical which can be hived off as a separate company at some point in time. And that is how you monetize the value, because the value unlocking in our kind of structure is not simple. You have to, because we are already listed, but holding company structure, so this gets a discounting in the market. So from a shareholder's perspective, only 2 ways one can get the
value.
By when we do a demerger or we create a separate company of which they get a share. And this is what we are planning to do right now. We had planned to do it a few years down the line, but we are doing a little early.
Why is that?
Mainly because we are finding that the market is not recognizing the value which is inherent in all those companies, and shareholders are also becoming restive, including our own promoter group, that what is going on. So I think with this, and there was an opportunity to combine our fashion business, which is basically brands, with the large distribution which Pantaloon Retail has.
And so you're confirming that it will be merged into Pantaloon Retail and not as separate entity?
No. It is not Pantaloon Retail. Pantaloon Retail is demerging their part of the fashion business. We are demerging our part of the fashion business, and both demerged businesses are joining together to form a third company. And the third company will be a listed company. Which will be called Future Lifestyle Fashion Limited. And the shareholders of both Future Venture as well as Pantaloon Retail, they will get shares into that third company. So see, from our perspective, what we are taking out is worth around 1200 crores. What Pantaloon Retail is taking out is worth 3200 odd crores. And they will have a combined turnover of close to 3000 crores.
So by when do we expect this entire process to end?
We have court convened meeting on 4th of March this year. And within 45 days of that, we expect it to get listed. So we can say that by end of April, we can expect it to get listed.
And do you think the market would recognize that as a better value?
I think so. And at least in the long run, they will certainly recognize.
So then all your focus now will be in Future Ventures directed to what?
Now what is left with the Future Venture is mainly our food and FMCG business, which we have strengthened recently. In last 6 months, we have acquired Big Apple, is a convenience store business based in Delhi. We have also acquired KB's Fair Price, which is again a convenience store business based in Delhi, Bombay and Bangalore. All put together have close to 200 stores. Currently they have a turnover of close to around 400 crores. Based on the run rate which they are achieving now. And that business plus our business of private brands, which again has a turnover of close to 200 crores. Plus we have a business of rural distribution, which is Aadhaar, which has a business of around 150 crores presently, but it has a huge potential to grow again. So all put together, we'll have a turnover of close to 700 crores in our food and FMCG brands and distribution business. And this is what...
This you're talking at the end of FY13?
I'm talking about FY13, yes, but I think FY13, because of the accounting issues, you won't find the whole thing getting reflected.
So what would then be
FY14, I'm expecting at least 40% growth from there. So it will be close to more than 1,000 crore business for FY14. In addition to that, in this company, we also have food park, which we are setting up, 110 acre food park, which we are setting up in Bangalore, near Bangalore, and that will become operational by FY14, and that will also add to the further business.
If you're not seeing that kind of value in the open market or stock market, would you not see more value growing the business and then probably getting another institutional investor or a private equity to then sell off the business to?
You see, capital is always an issue in this country, and for getting capital for these kind of businesses are not that easy. But we'll take decision at the right time if it is required to be taken. But as I see it, by next year I am expecting fashion business in itself is quite profitable. It will remain profitable. So that is not a problem at all. They don't need any capital also. Food business also, we have sufficient capital in our kitty right now. After all this, we'll be having at least 250 crores in cash in Future Ventures, and food and FMCG business can be grown with that. And I expect that in a year's time, the food and FMCG business will also be turning towards profitability. Then I don't need capital. That business doesn't need much of capital.
Would you be seeing more diversification even in the sectors that you are? Because we've seen your F&B vertical, and they're more into packaged foods and retail markets. Would you not want to tap the hospitality market? Would you not want to diversify in this sector, especially because both fashion...
No, I think you are talking about food service.
Yes, food service.
Not hospitality. Food service is something which we don't want to get in, because we want to create products and brands and distribution. And this is what we will continue to do. So therefore, there will be more diversification in terms of more products, more product and brand companies where we can invest. And we are looking at those categories also. I don't want to name it today.
Would you be looking at a premium space, or because we've known that Future Ventures and most of the Future Group has always believed in the middle to lower class and mass market type of brands. Would you still be looking at that? Would you still be following that sort of a policy, or would you want to look into the premium market also?
No, we will be looking at. We would like to look at only which can be scaled up. And in India, to scale a premium market is very, very difficult. And our DNA is also relating to the mass market. In that, there may be some categories which could be premium also, but I think largely we'll limit ourselves to daily consumption items, which are used by most of the people.
Now, Vernvest, the Belgium investor, bought in an open market, yes. And they didn't really, it wasn't a face-to-face contact. But ever since they have invested and shown interest into Future Ventures, have you all resumed, or have you all tried to open up talks with them to bring them more involved in this business?
Yes, actually there are a couple of institutional investors who are very keen to invest into Future Venture, and they are going through their own process of evaluation, and we expect some. It is up to them actually.
What could those synergies be?
It's not about synergies. World Invest certainly has far more synergies because they are very focused on consumer businesses. They are investing in Europe and Asia in consumer businesses, and therefore they are clued on to these businesses. They understand the underlying value in these businesses which are created over a period, and they are very, very patient investor, and that is what you need for businesses which are dealing with brands and developing businesses like how we are doing here. And we are looking for those kind of long-term investors if we have any control on that. But in the secondary market, you don't have that control, unfortunately. But I think people who will have conviction into our business model will only come into buying it.
Considering the kind of competition that company remains in today, do you think that the growth in ACK Media is okay, or do you think they still require to ramp up a lot more?
I think in case of ACK Media, they were into many things, and with the new management team which we put in place after we took over the majority stake, they have done a lot of work to first of all create the right kind of strategies for the growth. It has taken them 1 year to come to a level where they are moving in the direction which is future for this company, which can be future for this company, which is kind of digital media, which is investing into print media in a manner that it can appeal to the younger generation. So younger generation is mostly into digital. So, but in India, it's such a large country, we will still have a lot more print media continuing in this country. And secondly, on animation side, a lot of work is happening. It takes a lot of time to create right kind of products and bring it to the market.
Because even Vijay Sampath was telling us that he would touch a 3-digit figure as far as revenue is concerned only in 2015. And considering the kind of global competition there is, you heard recently that even Stan Lee himself has invested into India. So the competition in this space is really going to ramp up.
I think it's not about the competition. I think in this business it is about what kind of content you are able to create and whether it can appeal to the audience. So target audience. So I think that is the real issue, and I think top line is not the most important thing. This business is all about having the right kind of content, and you will have to leverage it to the maximum extent possible to all kinds of media. Whether it is digital, whether it is print, whether it is television or movies.
Amitha Katha as a company does not really fit into the core expertise of the Future Group. One wonders that, especially when many animation and edutainment companies are entering India, one wonders whether it's a perfect target for a sale to, say, a Walt Disney or a DreamWorks. Do you think Future Ventures could look at it as a company that they would want to get more value out of rather than build this business?
See, Amar Chitrakarta as a company we have acquired looking at a couple of things. One is that there is a unique company in this country which has a kind of fan following, which has a very distinct identity for it. There is no other company like this. And in this particular era where in particular area where it's very difficult to create the content, they have done good amount of work over last so many years. And that was the main attraction. And it also represents in some sense our heritage, Indian history, mythology, etc., which has a very, very rich content and which has a huge possibility to go global. And I think the whole effort is to make it capable of doing it. In 1 year, can I say that we have reached there? No. So I think once we have done something in that direction, and that is the effort, then we will think about taking any strategic stake, interest, or monetization. I think is still far away. I think monetization is not the most important thing in this business for us. What is most important is to whether we are able to create the right kind of value in the business and therefore for the shareholders. And we believe that we are onto something good here. It may take some more time and it may take more than what we have thought. But I think it will create something which will make us happy, apart from making us rich.
What would you tell your investor that this is my target now for the coming year? Will I be looking at more verticals? Will I be looking at more sectors?
No, we are not looking at any more sectors. I think our target is to develop our food and FMCG brand and products and distribution business. We believe that there is a huge opportunity in this country to develop an alternative distribution, to develop alternative brands and products which suit the Indian taste. And therefore, we will continue on our into this direction only. That we are not going to add any more vertical. And I believe that that is enough to keep our hands full in the next few years actually.
On that note, Mr. Rathi, thank you for talking to me.